So I just want to do a quick video here looking at the latest Bank of England meeting where they decided to increase the base rate of interest. And they also looked at what they think inflation is going to hit in the next couple of months. And the figure is shocking. It really is. But we'll get back to that in a second. But first of all, I want to talk about this interest rate rise, the base rate rise, and quickly touch on how that might be impacting you either right now or in the coming months. In fact, there's an indication of where we might see further increases. So we'll talk about that as well. But this is what's happened, okay? So there are 9 members of the committee and 5 of them, so the majority of them voted in favour of an increase from 0.25% to 0.5%. So that is what happened. That's what went through. The base rate of interest is now 0.5%. This is the second increase we've seen. This is back to back. So the last meeting in December, the increase was from 0.1% to 0.25%. And now this one again. That's the first time since 2004 where there have been back to back increases. It just shows you how rare this is, this happen. And obviously exceptional times right now because we've seen lots and lots of cuts down to that historic low of 0.1% where it was for a long time. So the only way it is up isn't technically true because it could have gone to zero, it could have gone to negative, but it didn't stay where it was for a long time. And now we're seeing an increase. And then we saw another increase today at 0.5%. So what does this mean in the short term? Let's look at savings first of all. Sounds positive. In theory, you'd think if this is what informs the savings rates that banks are giving us, you'd hope you'd see that 0.25% added on to the different best buy savings accounts rates, wouldn't you? That's what you'd hope. But the banks don't have to pass it on. They don't have to do this. And when the rates went up in December, not many of them did, to be fair. And if they did increase the rates, generally, they were the ones at the bottom, the ones who weren't paying much money anyway. 0.1% suddenly became 0.16%. And I say suddenly, that's a lie. It took them weeks for that to actually happen in a handful of occasions. And a lot of them didn't do anything at all. There's still many accounts out there which pay practically nothing, if not zero themselves. So yes, it's potential, and hopefully, fingers crossed, we will see an increase to those rates, the extra 0.25% added on. But I don't think it will happen straight away. I don't think it will happen. It definitely won't happen across the board. And I think it'd be quite isolated where it does go on. Right now, the best easy access accounts are paying 0.71% roughly. There is a double access account that's just sort of been released, 0.75%. So if those ones and the ones around them were to factor in this one, then we're getting very close to 1%, which is the best, the highest rate we've seen on easy access for a long, long time. But again, I don't think we'll see that. I like to be wrong. I would love it if we do suddenly see a flurry of 1% accounts coming in the next few days. That's still, it's really important to note here, that's still way, way, way below inflation. The most recent rate, 5.4%. Spoke about this briefly in my savings update last week, so check that one out if you haven't already. But it would be nice to see it, but don't get your hopes up too much. Other things, something else that's will happen straight away though, is if you have a mortgage. Now, if you are on, some mortgages, I should say, if you are currently on a fixed deal, nothing's going to change, right? Whether you've got 1, 2, 4, 10 years left of your fix, whatever it is, that is not going to change until it does end. Now, when it does end, you'll then move on to a standard variable rate, or you'll be looking for another fix, and those rates will likely be increased. So if your fix is ending in the next, 3 to 6 months to a year, then yes, you'll be seeing higher rates out there. You won't be able to get as good a deal as you got potentially last time. Obviously, it depends when you got that deal. If you're on a variable rate mortgage right now, there's no guarantee that the rate will increase for you. The banks don't have to pass it on, but broadly, I think last time they did. So you'd imagine you will see your mortgage increase, but it doesn't necessarily mean it will happen. But keep an eye out for your email or a letter in the post from your mortgage provider to let you know if there is going to be an increase. If you have a tracker rate mortgage, so this would be something like the base rate plus 1.8%, plus 2.5%, whatever it is, then absolutely right now your mortgage already got more expensive, and it's already got more expensive last month, well, I'm saying December. This is yet another one. So it's going to get more expensive straight away. So just bear that in mind. This is extra costs you've got. Now, the mortgage broker Trussell has said that the average mortgage in the UK, this extra 0.25% added on to rates, if you are impacted by that, is worth around 332 quid over a year. That's on top of obviously that one in December, which already added a fair bit on as well. So you will see that increase, and it will make a difference at a time when costs are spiraling everywhere. So just bear that in mind. In terms of other borrowing, if you've got a credit card, if you've got a loan or anything right now, you're not going to see a sort of an immediate impact on that. And in fact, if you've got a loan, that loan is agreed for a certain amount of time. Obviously, it could be that if you go to borrow again, rates could have increased in that time. But really, the big one that will be affected here are anyone with a mortgage. Now, something else that happened in that meeting concerning interest rates, which was really interesting, is, I mentioned that 5-4 vote. 5 people wanted to increase it from 0.25% to 0.5%. Normally, when this happens, it's a case of keeping it as it is or increase it. Okay, so you'd imagine from, say, a 5-4 vote that would mean 4 people wanted to keep it where it was. No, not this time. I think this is really interesting. The 4 people, so just a touch of the minority, only 1 person to go the other way. 4 people wanted an increase to 0.75. They wanted an even larger increase. So we could very well be talking about not just a doubling of the rate, because a trebling of the rate could easily have happened today. Now, it didn't, but that would indicate, and with interest rate rises, you can never really accurately speculate on this. It's always a bit of a guessing game, because things change, and the next thing we know, we're talking about them going back down or whatever, or staying as they are. But the kind of strength behind that would suggest that next month there will be enough people pushing for yet another increase. Now, again, could go up to 0.75%. Maybe there's enough of going on, people, where it goes up to even more to 1%, much, much faster than was kind of predicted just a few months ago, when we thought maybe those increases would be gradual throughout the year. Again, don't know, might not happen. I'll keep you updated on the channel if that is something that's likely to happen, but it's worth bearing that in mind, that already, particularly again for you who've got a mortgage, those increases could continue and get more and more. Now, the other thing I want to talk about that came out of the announcement today was a kind of forecast on inflation. Inflation is currently 5.4%, the highest in 30 years. Predicted today by the Bank of England that it will hit around 7% by the spring. So we're February now, so we're a couple of months away. It could peak at around 7%. That is huge. I mean, again, a few months ago, people were talking about inflation peaking at around 5%, then maybe 6%, now maybe at 7%. Who knows? Maybe that won't carry on. But anyway, the prediction is inflation hitting 7%. That has a couple of impacts for you. One, obviously, is that the things you're buying are getting more expensive. We know that. We see that everywhere. I'll do another video very soon about the energy price cap increase, which is going to be the biggest impact out of everything, I think. But again, just bearing that in mind, if your costs are getting higher, not just because of your mortgage, because of the interest rate rise, but also because of inflation, everything you're doing is getting more and more expensive. And also what they're saying is it could take 2 years for that to drop back down to 2%. So we're going to be around here for a while. It's not just like a sudden flash in the pan, 5%, 5.4%, 6%, 7%, and then plummet back down. 2 years before we get bound to what the Bank of England would like to have of 2%. That's where they would like inflation to be. That kind of, they feel, is a decent kind of medium for it to happen. So there you go. I'll keep you updated of any further changes in future videos. Make sure you hit subscribe and the notification bell if you haven't already. Leave me a comment below. Let me know how this is going to impact you. My name is Andy Webb. Thank you so much for watching. Here are some other videos you might find useful.